So first of all, your thoughts on the market's movement. Like I mentioned, earnings season has kicked off. We've seen 3 results already, but it hasn't provided much bearing on the market direction, has it?
No, it hasn't. I mean, the results we've seen are from banks that are fairly stable. I think the market's really waiting for some rescued banks, in a sense, the results to come out, and also more announcements on potential mergers.
And obviously, like I mentioned, UBA released yesterday, and profits were up 67%, but obviously not exciting the market. We saw the counter come down about 0.2% thereabout. And you know, the whole issue of UBA strategy and performance comes to the fore once again. But first of all, what are your thoughts on the numbers?
I think I look at the numbers in 2 ways. One, as UBA on the whole, the numbers show a vast improvement from what they did in Q1 and some of the results that came in there. So it's showing that there's significant progress going on from their Q1 results, which is encouraging. But when you look at it against their peers, like Zenith Bank, which released results a couple of days as well, the PAT is far below where Zenith is in that sense, and you could tackle into question whether it can be regarded as a peer to Zenith anymore.
And that's the key thing. The bottom line, they're underperforming most of the top-tier banks. And like I mentioned earlier, the issue of their strategy. UBA has come out with a strong retail strategy and, of course, an Africa strategy. What are your thoughts on how they are organizing themselves in that regard?
I think the Africa strategy is curious. You're trying to create a Pan-African platform, which is sensible enough, as long as you control your home market. In a sense, it can be argued that the home market has not been UBA is not as dominant in the home market as it used to be. And so why focus on other markets when you have focus on the home market? You look at the likes of Zenith, GTB, First Bank. They're focusing on dominating the Nigerian market before looking to spread. I think that is causing some of the issues. Then the Pan-African strategy is leading to cost issues, which I think is what's affecting the bottom line here, because you're expanding to some certain countries all across Africa. They're not really providing that much uplift into the bottom line, but a lot of costs go into that expansion.
And then, of course, there's the issue of the retail strategy. Recently, it seems they are some tweaking that a little bit. Some announcements regarding minimum deposits for savings and perhaps current accounts. What are your thoughts on UBA's retail strategy?
The retail strategy is the way the market probably has to go, in the sense that certain levels of certain deposit holders, UBA have set the mark at 25,000 naira. It's not economical for them to do physical branch interaction with branches. And so UBA are trying to address that, in the sense that they're encouraging those customers to use mobile banking, which reduces the cost for UBA and, in a sense, provide better service for their customers. But I think the whole way it was rolled out, the corporate communication strategy wasn't the best. So the idea that came out initially was that if you don't have 25,000 naira, you have to close your account, which wasn't really the thing. So I think if they had rolled out the corporate communication strategy in the proper way, then it might have been better received by the market.
And then this whole debate about top-tier banks and middle-tier banks, how are you playing the banking sector in your thoughts? I mean, one analyst from Citi is really biased to the top-tier banks. Others are biased to the mid-tier banks because of the growth potential. What are your thoughts?
I mean, in our thoughts, my focus on the top-tier banks. The middle-tier banks, they do have growth potential, but there are fundamental things in the Nigerian economy that's going to prevent that growth potential. In a sense, unless you can address basic infrastructure problems, issues on credit, and things that you can't grow the fast-growing areas of consumer credit, retail banking that are required to actually really take off. And in terms of corporate investment banking, that is a very highly competitive market in that sense. But the top-tier players like Zenith, the First Banks, GTB, they seem to have created a niche for themselves, and they're showing good results and maintaining that. And until the infrastructure improves, I don't think the middle tier will always be prospective, but they can never reach that level until all those kind of issues are addressed in the economy.
So you would say big is best. We've seen, for instance, the likes of Diamond Bank showing some interest in some of the rescue names like Oceanic. Would you say that's the way to go if you're a middle tier player right now?
It all depends on how you merge. Merging two institutions is very difficult. Acquiring institutions is very difficult because you have to try and get your cost economies into place and merge the identities and the cultures. It's always very difficult, and we've seen that with Spring Bank and what other institutions that merged in 2005 that haven't really got over it. I think a bigger platform is better if you can manage it better. Now the issue there is, can Diamond Bank manage a bigger platform?